Hello, how's everybody doing today? So today marks the final day of the month, this August 31st, 2019, 1:30 p.m. Central Standard Time here in Manitoba, Canada. I hope you have all had an amazing month so far, whether you are learning from the mistakes or whether you're capitalizing on the volatility. Either way, you are coming out ahead because you are in this game, okay? So don't ever feel discouraged if you think that you're taking some losses. I've been there, man. I've taken more losses than a lot of you, I'm sure. No offense. And the perseverance has certainly showed itself in the past, in the years to come, right? So I hope you guys are always capitalizing on everything you do in life, whether it's with your family or your job or with trading. Take every single loss that you have in life as an opportunity for you to grow from it. There's only one way to see things, on say the negative or the positive, right? And I know that a lot of people are struggling. I've got this amazing friend who lives in Europe, and she's got her ups and downs with trading, but I really believe in her. Like I keep telling her every day that the struggles that you put in, man, the scars that you have in your hand, the blisters, the calluses, they're there for a reason, right? So, anyways, let's get on with this. Enough with the pep talk. So, it is the very last day of the month. Are you guys excited? Because I sure am. So, we're going to take a look, first of all, at how the monthly is looking, which is probably no change whatsoever. Okay. So, let's take a look at the monthly. We got a huge green candle. Volume picked up, picked up, picked up. And then this month here, July, was a heavy sell volume month, of course. And we noticed that in June, July, and August, the highs for each candle, for each wick, is not nearly as much. So what another thing we can also notice is that because the volume is also decreasing, does that mean that the sell-off volume is now done? Guys, I don't think it's actually done. I do believe there's still going to be another leg down, and I'm going to break down the Elliott wave theory for you in high detail so we can all be on the same page. We talked about yesterday already about how the next week may have a chance to actually close below the 13 moving average, and the weekly starts actually September the 2nd. Volume is slowly decreasing, but of course, on the weekly, we will always have some sort of support on the next EMA coming to the downside. So I believe we will find, no matter what, some support, even if temporarily, at the 21 moving average. We keep walking down the line here, and what we're seeing, for example, on the 2-day chart, is that yesterday we held barely above this 55 moving average. Is this a descending triangle that we will actually see? Okay, we are looking at the histogram. There's no curvature to the upside or it rolling over quite yet. Okay, for example, here, when we see the second or the third day, we can see the momentum rolling over, which is indicative by the price action here, and also these very large green candles moving to the upside, right? Okay, so now we just keep looking down the line. We say to ourselves, all right, this fanning strategy, the 55 moving average, we're now actually breaking below it now, right? But will there be a small pump before going to the upside? And my answer to that is yes, there could be a very, very likely pump going to the upside. And I'm actually looking forward to that today. I'm still in a long position for Litecoin, like I mentioned, but I've been dollar cost averaging, so I'm literally just completely broken even right now. It's position not even worth talking about too much. It's more so just getting my feet wet, something to do, I guess. And now we're trending well below this 200 moving average. We're finding that we tried to break above it. For example, here on August the 30th, yesterday morning at 7, trying to break above the 200 moving average on the 12 hour, but we just simply couldn't do it. So there's a lot of mixed signals right now. The volume is slowly waning off right now, but it's waning off because, hey, is this actually a bearish flag? Right? So we're looking at all the indicators, and the one that's the most bullish, in my opinion, is the 6-hour chart, where we have finally crossed over to the positive side. But another question is, how disappointing could it possibly be? What ends up happening usually is this, okay? Let me just draw it out for you very quickly. Let's say I end up making this red. The red one just ends up coming all the way around like that, okay? The red one comes all the way around like that. And then we get the blue line, which is the slower moving average. So one, if you notice, is the 26 moving average. and the other one is the 12 moving average. And then the blue one is the slower moving line, right? So let's say we got a small crossover, just pretend this was green like that, and then we went back to the negative side. Well, this would actually emulate it very well. We would get one crossover, and then we'd come right back down, and then eventually we get a crossover back up like that, okay? But these 2 points are always important to make note of. These happen all the time, these little fake outs, right? Where people think it's going to cross to the upside, but it doesn't actually cross quite yet, not until the second one. Okay, so I'm being very cautious. When I'm scalping, I'm very, very aggressive. But when it comes to playing with very large sizes nowadays, I'm using a much more slower method of approach. And the methodology is a lot more sound just to make sure that I'm protecting myself from making dumb mistakes. So now my big question, guys, is this going to be a descending triangle? Okay, I'm just giving you guys a quick analysis first of just trend lines in general before we move on to the bigger and badder things, okay? So, I'm just doing a basic analysis like this right now, and I see, hey, all right, okay, maybe we'll get to, at least $1,200 going to the upside. Okay, so now let's get into this Elliott wave theory analysis of ours, and it's going to be fairly brief. So now, as you guys all know already, that Elliott wave says this. You can have 5 impulse waves going to the upside, just like that. And then you get an ABC coming to the downside to whatever Fibonacci structure range, right? And then after this, what you get is you get an impulse wave going upwards. After, if these have all made beautiful ABCs coming to the downside, I will now search for a 1, 2, 3, 4, 5 impulse wave attempt going to the upside. But unfortunately, sometimes either the fourth wave, for example, okay, the fourth wave ends up retracing more than 100% of the third wave going upwards, which also means it retraced lower than the point of wave 2 territory. That is an impulse wave failure. Or if wave 2 ends up retracing more than 100% of the original first wave going upwards, okay? Let's just say wave 1 did this. Perfect. But wave 2 ended up retracing more than 100% of wave 1, then that's automatically an impulse wave failure right here, okay? Or, for example, if it does even this, if it does 1, 2, 3, 4, 5 for some reason, right? And then you're getting an ABC that extends well below it. Or, for example, you're getting 1, 2, 3, 4, and 5 as your actual A here instead, right? So they can fail in many different ways. But now let's just say that this wave ends up failing. And then what we would call it is we would call it a WXY. And the WXY denotes a double Elliott wave formation. I know this might be redundant to a lot of you, but I'm also wanting it to make it very welcoming to newer traders and also to people who are just getting into the crypto game. I don't want to always cater towards, say, you guys, right, where I know a lot of you guys know a lot of the material already. So now you get an X there, right? And then you're looking for a Y, basically, okay? Now this is the wave failure going to the X, where the X denotes wrong, failed. And then you're looking for another ABC coming to the downside, okay? Now this could possibly be the trade of a lifetime, if I am right. Now, if I am right, I will be extremely happy about this because then I'll have made pretty decent amount of a percentage gain. The way that I am seeing this, and I will not change my theory anymore because I've spent 5 days deducing this, and I want to simplify it for everybody in a very condensed manner where I'm not going to take up 2 hours of your time. I've actually broken down every single one of these waves, and I'm able to subdivide this into 5. I've also concluded this right here, okay? I've also concluded that this right here is my wave 1, 2, this tried to make a 3, okay? And then this actually ended up failing already, okay? And it ended up completely failing already because it's retracing too heavily into this wave's territory right there. So because of that, I've now decided to officially call that right here my W. My point of where the X will begin, or the impulse wave has begun. And now what I am searching for is I'm searching for what's going on right now. Bitcoin is falling off right now, I think, okay? So I'm pretty pretty set on my target, I have to admit. Okay, guys? Let me show you guys everything. Okay, now I'm literally almost broken even on Litecoin, and I'm probably just gonna end up stopping myself out here because I don't think it was the best trade to take to begin with, to be quite honest. And it was more so just testing a new strategy. But I just want to be very honest with you guys that my base price is actually about $63 now, actually 63.20 right there. So I'm gonna give this to about 62.50, and then I'm gonna take either a small loss. I'm definitely gonna take a small loss around 62, 62.50. It's very tiny as well. It's about 0.5%. So I'm always very honest with you guys, as you know, and there's no reason for me to not be ever. So anyways, let's get back to this right now. We're gonna get back to this on the 4-hour chart. That seems to make the most sense to me. Okay, so now I see this as my X, and the X is basically the point where the new impulse wave has begun after the ABC right here has officially finished. Okay, and the way that I'm counting this is almost ridiculous, but I've got to count it like this. Okay, it's the only way for me to count it like that. If I were to count this, I've got to be able to count it like that, guys. It's almost ridiculous how that is by 0.2, and I'm saying 0.3 there, 4, and I'm saying 5. So that's the way that I'm counting that, and I'm calling this my B right there, okay? That's right, I'm calling this my B structure up over there. And now the way that I am seeing this as well is this, okay? I'm seeing this as A, okay? I see this as B, and I am searching for a C right here. And the way that I'm seeing this is actually like this. Okay, if I'm wrong about that, oh sorry, I'm gonna backtrack. Then the way I'm looking for this right here is this 1, okay? I see this as 2, right? I see this as 1, 2, I see this as 3, and I see this as 4, I see this as 5. I see this still as basically one more touch somewhere down there, and I see a retracement to somewhere on the upside, okay? And I see one more drop down to about this particular range. Now let me break this down even further for you, okay? And this is actually not that difficult to break down. This is broken down to 1, 2, 3, 4, and 5, as we see clearly. And then this is also broken down to A, okay? This is B right there. And this is the most, like, this could be B. From here, that could be B, where B is truncated, and that's the C. But the ABC in here is broken down to 3 horrible waves with, well, decent waves, with the truncated B wave here, right? A, B, C. Well, sorry, with the truncated C wave relative to the B right there. So that means that this must not be done quite yet, okay? So if I break this down even further on a 1-hour chart here for you, this is the way that I'm seeing this. I see this as 1. I see this as basically 2 coming to the upside, or this whole structure right here could be 2, okay? And I see this as 1. Sorry, I see this as 1, 2, 3. Actually, this could even be done already. I see this as 3. I see this as 4, right? I see this as 1 more 5 to the downside, okay? Now, if I'm wrong about that right there, then that means that this is 1, 2, and this could be 1, 2, 3. Actually, no, this has got to be the right count. If this is not the right count, then this is 1, 2. No, this has got to be it, right? 1, 2, 3, 4, 5. That's how it looks like to me. Okay, let's go to a different time frame. Yeah, definitely. 1, 2, or even like 3. This 4 might not even be done yet, okay? Just to be clear, 4 might not even be done yet. And if it is not done, then I would most likely be aiming for something like, let's see if I can, how did I even do it last time on this particular structure? Like 4 could easily just be somewhere along this particular region, where this is 1, 2, 3, 4 could even hit up to, at most, in my opinion, at most, okay? If we do break to the upside, the most that I think we can get for today, guys, is about 9,800, okay? That's what I'm talking about for a short rally before the end of the month, okay? So once again, we see this ABC broken down here, ABC, and I'm counting this structure right here as 1, 2, 3, 4, 5, but I see this as basically 1, 2, 3. Okay, it's not quite done yet. I see this as 1, 2, 3, 4 at most to 9,400, or we're done already, and then we just drop. We drop to definitely 9K if we do drop. If we do drop 9K, because it's just such a strong psychological number. And then when we're bounced to the upside for the 4, which I cannot see that surpassing a high amount, I would probably guess a Fibonacci retracement structure of at most, yeah, maybe 9,500, right around this cluster region, right where we are now, 9,550. And then we finally finish this ABC, okay? And then we finally finish this ABC structure. And guess what? Right here, okay, we actually do about a 1-to-1, which is kind of scary, in my opinion. Like almost actually no, it's not quite a 1-to-1. I'm sorry about that. It's about 0.786, right? So, and then that also coincides with the daily chart just being extrapolated as well, okay? Just kind of extrapolating it like I've been mentioning. Right now I'm on Binance for the people that are curious, okay? Just extrapolating it, you know, whatever, something like that, where it's just going to be landing around this particular range. So that's now the bearish side where we drop one more. And then the bullish side, I want to be very clear that the bullish side is that we hold exactly where we are. None of these EMAs even matter right now. The bulls make a huge rally for the end of the month right now, okay? We go to a more relevant time frame, something where we can crystal demarcate, okay? What's one of my favorite words in engineering, because I used to do takeoffs, okay? Takeoffs for HVAC, for plumbing, where I would just count all the piping, right? And I would demarcate a certain section, and I would isolate where I'm working and the region that I want to focus on. So the lines are all psychological, right? They're all psychological, as in people only buy at when they see these lines because it's just a psychological price point that everybody tends to see. So we know that lines, okay, lines don't actually exist in trading. Like, I just want to be clear about that. I don't believe in lines either, okay? A lot of famous guys don't. Peter Brandt doesn't believe in lines. The only reason I believe in them is because I don't actually believe they're significant in any way. I just see the psychology behind them instead, okay? So now on the bear side, like I mentioned, we drop to 8,800 and find decent support there for now. On the more bear side, if you are very curious about it, is even more grim. On the more bear side, which I would love for it to happen, is if we actually just dropped off of the face of the planet. Okay, we dropped off the face of the planet. We test here first, 8,500 range. We fail, and then we drop all the way down to this beautiful golden ratio range over here, around that golden pocket. That's the crazy bear side, right? And now the bullish side is that we demarcate this particular region, and then the bulls end up skyrocketing from here, right? So we go in very, very close to see a good entry point. You know, we get a bounce above 9,300 again. We see a huge wick to the downside, right? But it ends up getting rejected by the bulls because they end up coming to the defense. And then we end up going long. Let's just say we average 9,500 or something after we see a wick. You know, I would probably take my stop loss. I hate to say it, but, or not hate to say it, but I'd probably take a 3% loss here. I would probably end up targeting a whole fib structure of just this specific one that will coincide confluently to one of these structures. So then I would probably target to right around here, in there, and I would be very conservative, and I would take RR. I would take this trade in a heartbeat if I see a very long wick to the downside. So on the bullish side, what I'm seeing is a possible RR of 3.18 to 1. Loss of about 3%, gain of about 10%. Isn't that a very conservative target? We're talking about a very long wick to the downside. Okay, that's beautiful. So a wick to the downside, and then secondly, we're also getting lots of volume picking up as well. Okay, lots of volume picking up. So wouldn't it be a very good trade to take if all these criteria are met, where we're getting a good wick? Bulls are coming into the defense, which shows very clearly by the long wick when the bears tried to sell down, but instead they were actually getting trapped, right? Lots of RSI started to pick up as well. So volume, RSI, good candle price action as well. I think that'd be a pretty good long to take. I'm not recommending for you guys to take it. I always keep in mind, okay, I just want to make a general disclaimer that I'm here to provide educational content, right? I don't want one of you guys to, get mad at me or something for taking me to court, for some of the silliest things. So I'm just making that's my humor, right? To take that with a grain of salt. That I'll take everything I say with a grain of salt, and I'm just here to kind of navigate you guys with my opinion of the market, because I guess I do this professionally since I do sit at home all day, as you guys have been seeing me do for the past 3 years now. So this is my food for thought. Thank you very much for watching this video of mine, and I want to be clear that if you guys are left behind for Udemy and I actually have not processed it yet, whether you are interested in it or whether you would like to, whether I haven't processed it and giving you access to the course, please reach out to me. It is not me doing it on purpose. It is also the very last day for me to be able to offer you a deal through Udemy, through crypto, because I do not want to violate any of their rights or any of their policies, etc. So if you guys are interested in either of my courses, say 1 and 3 or 2 and 3, I think I'm doing it right now for like $130 or something like that, instead of the normal 220. And if you guys are interested in all 3, you know what? It's the end of the month. Just toss me $200 for it, and it's gonna be worth your time. If you guys are not happy with the content after the first few days, or weeks or something, I've always said to people, refund it. Like, literally reach out to me and I'll gladly refund it for you, like I've done for tons of people. But don't reach out to me 5-6 months later and then realize hey, it's just not for me. Someone actually tried to do that, but I'm not really cool with that, so I didn't refund it, right? Because yeah. But anyways, if you guys are interested in the course, last day of the month, just reach out to me. I'm more than willing to hook it up today, honestly, guys. I just want to one last hurrah for the end of the month, hook you guys up, and that's it. And then the prices are static, and I actually have new content coming out. I've been working very diligently on my level 2 course, and it's really long, actually. It's about 6 hours long already, and there's a lot of material on it as well, and it's very, very different compared to what you guys might have seen before and the way I do it, because I'm actually adopting a methodology of evaluating level 2 and then looking at it in the future as well, right? Excuse me, their throat got dry there for some reason. So I'm evaluating the level 2, right? And I'm making a prediction based off of that and some small technical analysis. And I'm evaluating walls, and I'm seeing how it's going to impact it a few hours from now, and that if that actually made a difference. So I'm also using the same approach of keeping a very good log of what I'm doing, what I'm thinking at that time, why I entered it, why I'm thinking it, and how it impacted it later. So I think that's going to be a pretty cool video series to come out down the road. And I'm also working on another video series for you guys, which is live trading for with $2,000 only. That's right, I'm live trading with $2,000. Every single day I will record a video. It's going to be a vlog basically of all my live trades and kind of my life, but it's going to be a budgeting type of series, okay? So I'm going to trade with $2,000, and in this $2,000, I have to be able to come up with my rent, my utilities, all my food and expenses for the month, including my internet, whatever, my cell phone, all that stuff, okay? Everything that I need to live off. My car is right outside as well, okay? It's literally, that's what I love about living here. I got a beautiful backyard. My car sits right outside next to me. I got to be able to afford my insurance as well, okay, for my vehicle. I got to be able to buy my gas, and that car only uses 94 octane. So, I've got a pretty expensive month in general just for living. My rent is about $1,500. My internet, everything is about $150. Cell phone, food. So just for my basic necessities, living alone, it's actually costing me about over $2,000 just to live every month. I know, actually maybe $2,500 just for the basic necessities, and I'm going to be cutting out just kind of my lifestyle of going out and stuff the way I do. And this video series is it's actually being filmed already, guys, right? It's I've been trying to film, actually sorry, it's been already planned, and I'm starting it September the 1st because I want to have it all of September, September 1st, all the way to September, the end of the month, then you guys will have a video every day. And I'm going to show you how I like my advanced way of budgeting and the apps that I use, the Excel trackers that I use. I actually track my spending down to the dollar. Whether it's candy or toothpaste or anything random, I need to know everything that I'm spending. You need to know how to manage money. If you have a little bit or a lot of money, everyone has a budget, but knowing how to manage it will also show you that you have the same discipline as a trader. Okay, so when I first started making a decent amount of money, it wasn't really good for me because I didn't know how to manage it. But over the past few years, I've been getting a lot better at it, and I just want to show you guys what I do, and on top of the live trading. So I thought that'd be a really cool video series idea because I don't want to be the typical technical analyst guy. I want to show you guys, how to actually work with money sometimes as well, right? And it could really help you. So anyways, have yourselves a great day. I hope that this has helped you to some extent. I apologize for the very long ending for this video. So enjoy the rest of the weekend, and I look forward to seeing you guys a lot more down the road. Bye now and take care.